What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. First of all, happy weekend. Hopefully you are all enjoying your weekend. I'm sorry I didn't upload yesterday. I actually ended up getting a new bike, and I'm going to post on the members only how that is, what my first ride looked like. I had a GoPro on, and I'm going to talk a little bit about it with you guys on the members only. But I want to start this video off discussing the quote-unquote move up to April 25th. Everyone is talking about the lawsuit. This is to discuss scheduling and logistics, and that is it. This is not the conference. This is not the trial. This is not where they are going to make a firm decision on the case. You can see that right here. A teleconference regarding settlement, scheduling, and logistics in this matter is confirmed on Tuesday, April 25th, beginning at 9:15 a.m., a listen-only audio feed of this hearing. Here are the numbers in case you do want to listen in, and maybe I'll even record it or be live for it. But overall, you still have that date as of right now on the 27th, and if not, that will be changed during the scheduling and logistics that you are going to see on April 25th. Now, another thing everyone is talking about, Adam Aron could have accepted the $1 billion, let AMC file for bankruptcy. So now we know that as a CEO, he's with us because he didn't do that. Another thing that I wanted to talk about and debunk, the only reason that this didn't happen is because shareholders raised $1 billion for the company. Adam Aron then said, hey guys, thanks for raising this $1 billion. Now we can take bankruptcy off the table. It's not, oh, we don't have this $1 billion, but since I'm an alright CEO, I'm just gonna not file for bankruptcy, right? That's not how it happened. So just keep in mind, shareholders mean everything to this company. Moving on, I wanted to touch on something that was posted on Reddit. Now, this is a quote-unquote theory with some facts behind it, and it's a very, very educated guess to say the least. Now, he says for the background, Dave Lauer posted yada 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 on Twitter, which we can confirm. Dave Lauer tweeted, just found this enforcement action from 2012. A subsidiary of Schwab was caught naked shorting and using options contracts as sham reset transactions, resulting in continuous FTDs, in case someone tells you it can't happen or something. Basically being sarcastic, stating that they are naked shorting using options contracts. Now, this guy's theory on Reddit actually comes together pretty well. He basically quotes the T+35 date that market makers have, and he quotes how long we were on the threshold list and when exactly we got taken off after that 38-day span of being on the threshold list. The too long didn't read of this entire theory is that based on the T+35, the amount of FTDs that lined up, he's taking an educated guess at how many fails to deliver are going to come in April, and if this theory does play out, AMC is going to come off of the threshold security list come next week. Now, there's another thing that he quoted, and it's taking a look at the FTDs and assuming they are going to be at this height in April. It lines up very, very interestingly to back here before we had that major rip in January of 2021. He goes, I believe April's first half FTDs will spike to 13 to 15 million FTDs based on the correlation between recent cost to borrow and FTDs. Only time will tell. AMC is on the Reg SHO list since April 12, 2023, after being listed from February 2nd to March 10th, 2023. If you look at the similarities from back then to where we are now, assuming we are going to have a major rip in FTDs for the first half of April. You guys let me know what you think about this in the comments down below. Further validation, AMC is on the threshold securities list for 8 consecutive days now. Not going to hold it to it, but definitely just something to keep in mind, especially coming up towards Monday. By the way, towards the end of this video, we are going to be touching on the charts because I didn't touch on them Wednesday, Thursday, or Friday because I wanted to leave that for the weekend. But guys, I didn't ask you yet. Please hit the like button. It's free. Hit the subscribe button. It helps me out. And make sure to have post notifications on. Moving on, this is a long time for shorts to have to cover. 10.47 days on AMC to cover. Fintel's reporting 26.89% short interest of free float. We know that's higher. We know off-exchange short volume is higher. However, the days to cover ratio is a very solid day to cover ratio. You necessarily don't have to hold this because if the volume increases by a substantial amount, then this is going to decrease. However, taking halts and other stuff into consideration, it still definitely will be a long time for shorts to completely get out of their position. Now, banks are making really big moves all of a sudden, and we saw that this past week, but we're seeing it now more than ever. Barclays to shut 21 ETNs a year after staggering note blunder. Now, if you read further into this, you're going to find that Barclays Bank was selling customers' assets by mistake and or naked shorting to the tune of $16 billion. Now they're closing funds all of a sudden. Banks are selling things that they never owned, seeing it time and time again. Speaking of shutting down, let's talk about resignation. Trading firm Virtu says Grayfield resigns as chairman to pursue other opportunities. All of this coming together, it just seems like something big is about to happen. But we're not done yet. Nothing says oh shit like a divorce. A Schwab divorce from bank could unlock value. The brokerage may be worth a lot more without its bank. It seems as if Charles Schwab needs to divorce their bank because of upcoming bank crisis that they're worried about, which they go over in this article. But on top of that, to free up some cash for their brokerage. Could this be a hedge so they do not get margin called? Could this be a hedge on the bank runs, or both just to save their own ass? Or are they doing something sketchy? Now, analysts are now predicting big growth for AMC Entertainment. This is interesting because we all know as shareholders May 5th earnings is going to be spectacular, at least better than the past earnings, hopefully going cash flow positive. But could they be using this as leverage by upping the analyst estimate and then AMC coming right under that analyst estimate just so they can smack it and take advantage of it? You guys let me know in the comments down below. Before we get into the charts, guys, if you want up to 15 free stocks, download Moomoo using my link and make a deposit. It can literally be a penny. Also, join the Discord. The link is under the video. Plus, guys, if you want some merch, some AMC merch. Also, this shirt was on the store, but it got taken down. So if you guys like this shirt, you probably can't see it, but there's little apes in here, the ape face. So that's pretty dope. The merch is under the video as well. Moving on, AMC closed at $4.99 on Friday. And we talked about AMC coming out of this green box, and then it's going to get smacked back down because that's exactly how it happens every single time. It broke out, came back down, broke out, came back down. This one sold off even further. However, when we hit this white part of the cycle, AMC always has a peak every single time, and we are nearing that cycle, and it could come a little bit earlier. Now, we have two cycles drawn out under the charts, as you notice. These ones you guys are very, very familiar with. We have been tracking these for a while. It times the bottoms, it times the peak very, very, very well. You can see even right here, it timed the bottom, right around the bottom for AMC, scaling up, and it will time this peak. It timed the peak every single time. Now, what I want you to focus on is the new cycle that we have drawn out. It's relatively new, but some of you already know about it. This is the earnings cycle that is played out through AMC, and it's playing out to a T with exactly how AMC is trading. We came up and we got this peak right around late February, right? We got this peak. We got this candle pop right here that you saw in AMC kind of trade flat up here. And then this second initial pop that we just saw over the past week and a half. And now we are searching for that bottom, which I have said multiple times. I think AMC is going to retrace. However, I think AMC is going to have a little bit of a pop on Monday, whether that's a 3 to 4% gain before scaling back down, coming back down to at least $4.42 before essentially scaling up. I think it's going to be a slow grind all the way up to early to mid-June. However, earnings on May 5th is going to kick this off, and we also have the lawsuit. So in this time period, very, very important week next week, and very, very important week for the week after. Now, I will also further explain why I think AMC is going to have a 4 to 5% day. But real quick, before we do that, I want to get into GameStop. GameStop couldn't play out this cycle any better. I mean, this correlation to this correlation to this is immaculate. GameStop, we called out this gap fill down here, and it's still reaching for that. I think GameStop will have a slight sideways to slight pop with AMC on Monday before essentially selling off and closing this gap. It's closing the gap next week at $18.30. Just my opinion. I'm not a financial advisor. I don't give financial advice, but this gap is going to get closed next week. Also, if we were going to track this cycle perfectly, GameStop would trade sideways for a couple days, close that gap, and then sell off even further to come back down and retest $16. And that would also line up right before AMC's earnings coming down to about May 4th, which means perfectly lined up, GameStop would have this sympathy pop alongside AMC's earnings. Isn't that such a coincidence, guys? Isn't it such a coincidence how the algos line things up perfectly? Now, just to keep it simple, right? We track XRP and Ethereum Classic to AMC. They move, then AMC moves, and actually these can trade on the weekend, so it's a good thing to see. XRP and Ethereum Classic are up both about 5% on the day. They're up 4.74% for XRP, and Ethereum Classic is up 4.38 or something currently as I'm making this video. They scaled down, now they're getting this little pop. AMC is going to get a little bit of a relief bounce before selling off even further, in my opinion. However, we do have the rest of the weekend to watch what XRP and Ethereum Classic are doing. Now, 5 assets: Bitcoin, gold, oil, bonds, and S&P 500 stocks stocks are moving in tandem with one another in what Bierman calls an automatic serial correlation. That is a major bearish signal. Markets are facing a black swan event with nowhere to hide as the latest rally has fueled a bubble that could burst at any time. With all of these bearish indicators, the SPY is still sitting at 412.20. Early next week, I still expect the SPY to retrace down to about 408.50 before essentially either getting another bounce or selling off even harder. But guys, do keep in mind all of these bearish indicators, as I still think that the SPY is going to have a sell-off at some point in the very near future. I still don't think that the relative bottom is priced in, and I will admit that I'm wrong if we get that break over 420. The SPY is very simple. It's going to move with what news we have. It's going to move with how bad short seller positions get, aka margin calls, so on and so forth, and bigger institutions, funds, so on and so forth. It's going to move with what the Fed does, what's happening with war, so on and so forth. But remember, the SPY rallied up to about 403.85 and short sellers lost like 80 billion, and now we're at 412, so they're not in a best spot. We are in a position where, okay, can they hang on long enough and then the SPY will rip, or can they hang on long enough just for the SPY to dump and save their ass? Now, to close out the video, Dave Lauer tweeted this: watching a multi-hour industry echo chamber roundtable right now, I'm not going to subject you to the inanity and hypocrisy of it, but I've learned that Citadel isn't thinking of their P&L, they're thinking about you, and Robinhood thinks retail comments oppose the rules. He basically goes on and says that Robinhood has already stated they're going bankrupt without payment for order flow, simply ignoring the fact that other zero commission trading platforms survive very well without it. Citadel needs Robinhood, Robinhood needs Citadel, and most importantly, Robinhood and Citadel aren't thinking about their P&L, they're thinking about retail investors and how you are about to fuck them over and how they can prevent that, or at least temporarily prevent it. Overall, guys, this is what I got for you for today's video. Hopefully you enjoyed watching. Make sure to check all the links under the video to get your free stocks, join the Discord, check out the merch, and also if you want to become a member of the channel just to help me out, I do try and push out extra content on there, such as stuff alongside my daily life, as well as answering any questions you guys have. Overall, I love you all. Enjoy the rest of your weekend. Lottery Stocks out.